Yo, it's your boy Nick again, the big tuna here, HOU Tex Trader coming from me. Okay, so it's January 19th, it's nighttime, and I wanted to review the NASDAQ trade that we took earlier that we broke even on, and we could have taken profit on. But I want to show you, I don't want to call it a mistake because technically we moved to break even, but we didn't book partials, and we should have really been in the other trade. So I want to show you guys what trade management looks like and realize maybe what we should have done, right? So let me get up my trading view here, and let's share my screen. Give me 1 second. Let's share the screen right here. Okay, so that's 30-30. We've already talked about that. Let's go to the NASDAQ. Okay. So today, let me erase all this. Jesus, NASDAQ. Okay. So this is the 1 hour chart on NASDAQ. Okay. Let me just delete this stuff to clear this up to show you where we're at this morning. Okay, so as I told you guys before, I like to get up, and I'm in Central Time Zone, United States. So for me, market open is at 8:30 instead of 9:30, 9:30 East Coast. News usually comes out at 7:30 my time. So that's 8:30 East Coast, right? So normally for me, I like to get up, look at the charts early in the morning, right? And so 6:45, I'm on the charts. I'm looking. I'm not really taking trades yet. I formulate all my ideas, and I start looking for trades around the 7:15, 7:20ish before news, because the way I like to trade is I kind of want to be in a trade if the trade setup is there before the news comes out, because a lot of times news will come out and the market will fire off, go. But I also see that the market is in a good position to buy or sell right before the news drops. And so I like to be there as it's happening, right? So in this situation, I'm going to draw a vertical line right here because this is January 18th, right here. So here's 8 o'clock in the morning. There's 7 o'clock in the morning. So where that line for me, that's 7 a.m. Okay, so we're going to keep that there. I'm going to back out to a little bit higher time frame. Let's just go to the 8 hour then. Okay, so at 7 o'clock this morning, right here, we can see that it had already broken all these all-time highs. So this is not stock. We can go way, way back. This is all-time highs. Nothing over there. So I just wanted to show you that real quick. There is no structure to the left. So taking a trade is well, risky territory. So actually, let me come back one time. This top blue line does not mean nothing right now, actually. Sorry for that. Okay, so here we are. Okay, the day before, we saw all of this here is a huge triple top, basically liquidity, and we were expecting that liquidity to get broken, broke up, broke down, and took off. Okay, so now we're trying to wonder, well, how do we get into sells? Because if it's breaking all-time highs, maybe there's a sell opportunity. At 7 o'clock in the morning, we saw oversold, oversold, oversold. This is not really divergence. It's not divergence at all, because these are getting higher. These little peaks down here in the RSI are getting higher, and the price is getting higher. So it kind of makes sense. So what we're going to do then, or what we did, is we start to draw some fibs. Okay, so we had a fib from this breakout zone to this breakout zone, and we noticed that the 61.8 TP is sitting right there. Okay, so this is all this is Asian and London, so we're sleeping during the time period. And we get up in the morning, we just see the market 2 a.m., 3 a.m., 4 a.m. It's just pushing. There's no reason for us to start trying to sell, right? So we come down to the smaller time frames, and we know that the 61.8 is right there. Okay, so we're going to come down, and this is a good example of how you do your analysis on the larger time frames, the 1 hour, the 8 hour, whatever. when you want to find an entry, when you think the market is at a place that's going to turn around or do whatever you think it's going to do, when it's in your area of interest, then you come down to the smaller time frames and get your confirmations of the trade. And hopefully through the series of videos that I'm going to make over the next years, I suppose, I'm not sure, I can show you how you do the analysis, and you can come down as small as the 1 minute. I know people who do it on the 30 and 15-second chart, which is ridiculous to me, but on the 1 minute, you can take trades on the NASDAQ, on the US 30, on gold, which is the most volatile pairs in the world. And I can show you how you can come all the way down to 1 minute fake trades. It is 100% possible. A lot of people say it's just noise, just random, which is completely false. It's not noise. Every pip, every candle has a reason behind it. So we started off on the higher time frame and we looked at the pushes. Okay. I like to think of Elliott wave pushes. This was our first push out of this consolidation zone. So let me draw the consolidation zone for you here. This is consolidation right there. I'm gonna delete this just so you guys have some clarity. This was the previous tops. So we knew going in that the market needed to come and take this out. This was a target, and we knew that. Okay, all of these highs are all a target. We are not going to enter at this. When it did this, this is not an entry place because you're entering the trade at liquidity. If you're going to short, vice versa, take longs, make sure that the liquidity has been taken first because you know that's a target. If you take a trade here at this double top, or it's going to be triple top, if you start shorting here because you think this is a resistance zone, you are now liquidity. You are now going to get taken out. Okay, you're the target. You're adding fuel to the fire. So wait for that to get taken before you start looking for your entries. Okay, so I'm just out of curiosity, and I know the answer. I just don't know exactly where. This is the same area that I showed you as liquidity. The first blue line, I'm going to delete this blue line. The first blue line is the old top. Okay, so in reality, what we're thinking is if this is going to sell off, because at this time we now have this low and we know how this low. It's almost equal lows. It's pretty damn close. So in my mind, this needs to get taken out. We just don't know when it's going to get taken out. So in my mind, if the market comes up and takes out this liquidity and hits all these stop losses, it hits all these orders, but it holds this top, then we could see a sell off, right? We want it to hold this top. So that's our play. When you look at the fib from this top to this bottom, our sell zone is the 88.6, 78.6. Well, that's right where liquidity is. Okay, so we're not selling there, but that also gives us confidence that that's the reason why these people were selling, because it's bouncing off the 88.6. Okay, we can see that. Okay, we get it, but really, we don't want to take a trade there. I like this area. We have this sell-off. We have these candles, these bull candles, and we have these bull candles right before it took off and it just sank, right? So this is the old bottom. So what I like to do is I like to draw with a gain box from there to there. Okay, that encapsulates those last buys and these last buys, top to bottom. There are people who were buying the market here, and the market has not came back to let them out of their trades. They're still in drawdown. They're still in those buys. Okay, market sank, and now they're in drawdown. They have a vested interest in pushing the market up so they can break even on those trades, right? So our target then is this area of liquidity. We're hoping that it held this area. Okay, so you're thinking, Nick, well, it didn't hold. You're right, but we still got in the sales and we still had profit. Even though this area didn't hold, we saw a nice reaction. Okay, so when I was meeting with the boys this morning, We knew that this was going to pop off, but we were looking for sells in below this blue line. I'm gonna delete this box so we can see better. Okay. There's our push up, which doesn't make much. We don't want to talk about that really, but just know that's liquidity and that's the old swing high. Okay. Here we now have, coming into the Asian session, oversold in the RSI. This next tip gets a little bit lower. It's not equal. It's just a hair lower. I mean, the strength is dying off, but the market is getting higher. The market continues to get higher, as you can see, as the RSI gets lower. I personally like to see a 3 touch on the RSI. 1, 2, 3 touch on the oversold. 1, 2, there it is, getting weaker, but it's still technically in our oversold spot. And it's now higher. Okay. So again, this is our time frame where we start looking for trades. Which that's incorrect. It's saying 2 in the morning, which is for some reason it changed. We're going to put it at 7 o'clock in the morning. Okay. So here we go. Look at all this divergence. Came back again to oversold. But at the same time, again, we're coming up. So if you don't understand divergence, divergence is when the price is going one way, like this, but the RSI, the strength of the index, is going the opposite direction. Okay. So here comes 7 o'clock in the morning. We are now again oversold, and we had a good push. Okay. So this is on the 30-minute chart. We're going to come down to the 5-minute chart. We saw this push. We saw this double top right here. Okay. I mean, it looks like real small candles just because I'm zoomed out. Let me zoom in. Okay. So now we're on the 5 minutes. We're at 7 o'clock. We're on the 5-minute chart. We're down here, and we're really looking at these candles. So our time frame is correct. We've already taken out liquidity, and now we're starting to look. Okay, so now we're starting to think, okay, here we go. We come down to the smaller time frame. We have high, high, high. RSI is a high, lower, still right at the oversold, even though the price is getting higher. Okay, so then in the internal structure, if you like drawing trend lines, actually let's just delete that. We'll change the trend line to this trend line. Okay, and actually if we zoom out, we could probably even get a better, longer trend line. Swing bottom to these wicks. Okay, to these wicks. And so it all depends on how you like to consider break of structure, but that is a break of trend line. Okay. I also like to combine that with internal break of structure, which is right there. Okay. That's not a true break of structure. We're going to call that a change of character. So when you see other people, you see the chart CHOCH, change of character, right? That change character. It broke trend line. It had a high, 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 but now this low broke these lows, this area. So then now we're really interested. Okay. You don't even need a fib for this, but take that back. We'll just play the double top. So when it came up and it got into this area and the double top, again, we're on the 5 minute. I'm going to zoom in so you can see this better. This is really what we're looking at. This is how you could take sniper entries. We saw this candle give us a doji. This candle printed bearish. So we entered right there. We entered the market right there. It's playing a double top. Okay. Lots of people play double tops. We are divergent. We are oversold on multiple time frames. Okay. So we took that entry. There's our trade for the day. Okay. We should have, well, we did move to break even down here. So I was expecting this again. So I'm going to delete our entry just because you already see it. Now I drew a fib from there to there. I was fully expecting some sort of retracement. It gave us this nice wick above the 61.8 and closed below it. So I'm like, okay, we're good. And I see this huge sell candle. Okay, we're good. At the same time, remember, we took a US 30 trade and it's also sinking. So we're like, okay, they're both selling off. This is good to go. Retraces. And I said, I was starting to retrace again. I was considering, I didn't do it. I was considering taking another trade right there. But we weren't oversold. You see how the RSI can be very important? We're not oversold. If this RSI had been oversold up here and there, then we could have taken another trade to let you know it's a strong possibility to turn around. So again, we're broke even and we got knocked out right there. So where's our mistake? It was a free trade. So in my opinion, anytime you have a free trade with zero risk, that's a win. Okay. But if we come out just a little bit of a time frame, I'm going to explain to you my opinion on what really happened. Delete this trend line. Let me just delete some of this stuff so we're not confused. Okay. So if I look at the chart like this, I see this as a consolidation period, a consolidation. All right. We might even want to go to the 1 hour. Okay. So this is small candles, comes up, it comes down. It doesn't really do a whole lot. And you could also say that perhaps, okay, this line is here, which is also the old swing high, right, from back there. So it came up, it rejected, starting to show a little bit of resistance right here, popped up, and it's basically just, it's not a perfect consolidation. But those are some pretty small candles, and there's a couple sell candles, whatever. There is where it popped off. There is where it shot up and broke this zone. And so what we did not see, or we saw it, but I was still willing to take the risk, even after I saw it, is that these two candles had what's called the push pins. Okay. Just I wanted to show you on the 1 hour time frame push pins. This is why we come and we switch between different time frames, because you might not always see on the smaller time frames or vice versa. This is why you need to come back and forth. Okay. Long wick down right into this consolidation area. There's the last two candles. So again, the market popped off. So there's sales sitting here. People have current sell orders because they're expecting there's the all-time high. There's the previous liquidity is down here has been taken. All-time high got broken. They're hoping for one of these fake out candles and this thing just slams. Okay, they're selling. Little did they know the market pushed and now they're trapped. So the market does what it very often does and retest this area right there, letting these people get out of their sells. We should have been buying, okay, but we didn't. So we're in US 30 trades, US 30 was slapping. And we saw this huge wick right there. I'm going to take this off so we can clear the screen up. Look at that wick down and close up. We were lucky. It gave us another opportunity. We should have taken that trade, okay, but we didn't. We were at break even, and if you look at how many pips we caught it almost perfectly at the double top right there. We were in 80 pips. So once you're in 80 pips, you move to break even, and you're just like, let it go. I'd already made money on US 30. I wasn't too worried about it. It's Friday. You never know. It's seen. So I don't want to say it was a mistake, but it's a learning opportunity where we could have gotten better. We could have seen this order block with these two cells. We could have seen this long wick down. I think it's called a hammer, right? That looks like a hammer handle in the hammer. We could have seen the hammer come down and reject it. We could have seen the retest of that area. It gave us more than enough chance to get into that trade, and that was the real trade. Popped off, came down, and then took off to the moon, right? So learning opportunity. It was a free trade. We protected. We gave it a shot. We didn't lose anything. But I wanted to explain how it's important to switch time frames. And if you're in a sell, think to yourself where the buyer's at. You should take partials where the buyers are, and then you leave the rest running, or protect like we did and try to hit a Hail Mary. And unfortunately, it didn't work for us today. But it wasn't a bad trade. We saw the market, we saw liquidity, we knew it was going to get taken. We were expecting a reaction in this zone, mostly because of the RSI divergence. And for some reason, I think we had some sort of fib in that area. I'd have to, drawing fibs on the go. Yeah, 61.8. So we were right there, top to bottom. We were just a pip or two away from the 61.8 TP. So that, the 61.8 TP on when you're doing something like this is, it's not a perfect science, but it likes to get into that area. If you draw a fib from there, to that next, that's not it. To that next top, actually. So a fib from there, which is this gigantic push up, the second leg of that Elliott wave, which would be right here. If you draw that before it started to retrace, the 27 is right there. So it's kind of rejecting that 27 at the same time as you just saw. You had a fib on your first leg on the Elliott wave. From there to there, you've got the 61.8. So, I mean, it's in that little sweet spot. What really did it for me was the RSI was divergent, candlestick formations, and that's why we took that trade. We broke it even. We could have had 80 pips, but we're not always trading for 80 pips. We're trading for more than that. So it is what it is. That's my analysis for January 19th. Learning opportunity. Hope you guys got something for that. If you have any questions, please leave them in the comments. Please subscribe. Please like. It helps us out. You know what I mean? Get that chat up, baby. What it's all about. You'll have a good night. Thank you very much for stopping by.